Okay, let's try some exercises from the textbook. This is Phillips 7e regarding the inventory. The first one we'll do is on page 332 in your textbook. And as you know, I use the online textbook so I can show you during these videos, but I need you to use your physical textbook if you would. I always use mine for prep when I'm getting ready for these videos. And it's always smarter to have the textbook available, like when you do your homework or when you go through these exercises, that way you can flip back to a chapter exercise that demos some of these things. It's very important. Okay, so this first one we're going to do, again, page 332 in the textbook, is E7.5. I'm going to pick up and actually solve E7.4 also, but first for some reason I chose E7.5, so I'm going to use that. Then I'm just going to add the solution to E7.4 also. But in any case, E7.5 says refer to E7.4 and pull the same numbers, but one of them does a LIFO approach, which is E7.5, and the other problem does a FIFO, or first in, first out approach. And so here's what we got. They said use this data set for both problems. So just one product began operating on June 26 with no inventory on hand. It then made the purchases listed below. So there's 3 purchase lots. The first one was 12 units at $8 for a total of $96, then 38 units at $9 for a total of $342, and then finally 20 units at $11 for a total of $220. So what they're asking for is for us to calculate the number and cost of good at the number and cost of goods available for sale. So it wants us to give them the number of units that are available, and that's very easy to see, 12 plus 38 plus 20. And then the total cost is that they've given us the totals for each lot. So all we have to do is add them together, 96, 342, and 220. So this requirement over here has that solution, and it looks like, okay, could be complicated, but it's nothing complicated about this. I could just as easily have taken an annotate pen. Let's go and do it right here and just total this 38, 50, let's see, 38, 48, 50, 70 units. And I could just add that up and put the number. Then I could just add these 3, 96, 342, and 220. And I would still come to the same number they got, which is the 658. Yeah, I'm not very good at writing with this little cute pen, but it's okay. I'm getting there. Okay, so that would be the same effect. You don't have to have a format to do this. You just look at it. You say, how many units are there? That's the total that's available because that's all I have. I could sell that many. I can't sell more than that. And I'm either going to sell those or I'm going to keep them in my inventory, one or the other. The cost that's involved is the amount I paid for each of those lots combined. So I'm just going to erase these little markings because I figured out that it goes with you if you scroll down the page. So I don't want that. But in any case, so we know that we have 70 units and they cost a total of $658. Let me get a little highlight on here. Okay, so then the units that are in ending inventory, we know the answer to this because we know how many we sold. They said we sold 46 units. So if there are 70 units and we sold 46, that means we're going to be able to tell exactly how many units are still there. 24 units still remain. So no matter whether we're using LIFO or FIFO, these things we've solved for are the same because the amount of goods that were available is the total that we had. That's all that was there. And then the number that are left, the number of units that are left is 24, no matter how you slice it. Because if we sold 46 and we had 70 available, there's 24 left to sell. So now the question comes, what is the costing we're going to use based on, are we using a LIFO approach or a FIFO approach? First in, first out, or last in, first out? So we've done requirement 1, which is calculate the number and cost of goods available. We've also done number 2, which is calculate the ending inventory. Now all we have to do is requirement 3, calculate the cost of the ending inventory and the cost of goods sold under the 2 methods. So E7.5 is asking us to do LIFO So we'll do it first, and then we'll double back for the FIFO, which is equivalent to doing the problem E74. Okay, so based on this, when we use a LIFO approach, it assumes we sell the last purchases first. And so when we do that, that means what's left in ending inventory is the earliest purchases. So 24 units in the ending inventory means under LIFO, the 24 units, see how much of this I want to show. Just this piece of thing. Let's try it. No, just the first line. I keep messing up my alignment. I'll just do a Control-Z to do backwards. There, now I'll fix it. Maybe I haven't messed up the alignment all the way around. Okay, so that's where we were. Ending inventory. I'm going to reveal this much right now. The goods available for sale. I'm just pulling it down because we already calculated it. The ending inventory is, if we're using LIFO, that means that what was left was the earliest purchase, 12 units at $8, plus 12 more units to bring it to 24 out of the next lot, which was $9 units. So that's where these numbers are coming from. This is 12 times 8, and 12 times 9 for a total of 204. So we already learned in the past that to come up with goods available, you could take the beginning inventory plus the purchases, and that gives you goods available. That's what we did. We had 0 beginning inventory, and then we added our purchases to get 658. But then we also learned that of that goods available, so one of two things is going to happen. Either you're still going to have it at the end of the period, so it'll be ending inventory, or it will be sold, and that'll be your cost of goods sold. So if we can figure out our ending inventory, like we do under periodic, that allows us to say all the rest of the goods available are cost of goods sold. And so that's all we're doing right here. We know the goods available and we know the ending inventory now. So that allows us to say, well, without a doubt, cost of goods sold is all the rest of it, which in this case for LIFO is 454. It turned out like that because we knew our ending inventory was the earliest purchases, the earliest 24 units. We had already decided there were 24 units left. So under LIFO, those 24 units would have been the earliest purchases because we were selling the last 10 first out. Okay, now let's see what would happen if we had been using FIFO. We would have had the very same cost goods available for sale, but we would have had a different ending inventory. Because under FIFO, we would assume we sold the earliest purchase first, and the last ones bought would be what was still left over in inventory. So the last ones bought would be 20 units at 11, plus another 4 units from the next to the last purchases. So 4 units at 9 and 20 units at 11. So that would be what, 220 plus 36. So that's where this 256 is coming from. So that's our ending inventory under FIFO, or first in, first out. So now the cost of goods sold, again, is just whatever's left. If you take the goods available minus the ending inventory, because here's what we had available, $658 worth of goods. If our ending inventory still sitting here is $258, that means the part we sold was all the rest, $402 worth under the FIFO method, okay? All right, let's see. Now let's go to the next one, E77. This one's doing very similar kind of process. This one says the company tracks the number of units purchased and sold throughout each accounting period, but applies the inventory costing method at the end of each month as if using periodic inventory system. And so they want to they show us what happened in January. They sold a total of 240 units. And this is what they're available was a beginning inventory of 120 at $80, a purchase of 380 units at $90 and a purchase of 200 at 110. So here's the extended numbers of how much the cost of each of these lots was. So E77, we're going to come up with the goods available for sale, same way we did on the previous problem, and the number of units available. This problem is almost identical to the one we just did, just different numbers. Okay, so when you take the beginning inventory plus the purchases, you get goods available for sale of 65,8. And then when you add all the numbers up of the number of units, you get 700 units. That's just this 120 plus 380 plus 200. Okay, so we know how many units there are. We know how much the cost in those units is. Now, do we know how many are left? Of the 700 units we sold, they told us 240. So all the rest of them are still in our inventory. The part that we didn't sell, 460 units, is still in the inventory. So again, here we go. With LIFO and FIFO, we're going to start with the goods available amount. Both methods will start with the goods available, and we subtract out the ending inventory. So for FIFO, we start with the goods available, 65,8, and that's just coming from right here. And then we calculate the ending inventory. First in, first out means the earliest ones were sold. So that 460 units is coming from this last lot, 200 at 110. 200 of them from there, and then 260 of them are from this second group. And that's because what we're doing here is selling the earliest ones. First in, first out means you sell you cost out the earliest units that you had, the beginning inventory and then the first purchase. So the part that's left, 200 units at 110. I think I have this right here. And 260 to make up the 460 at $90. So that's where this 45.4 is coming from. It's just a calculation of these 200 units plus 260 of these middle January 15th purchase. So the cost of goods sold is whatever's left after you take the total goods available and reduce it by the ending inventory. And that tells you what the cost of goods sold is. You could double check it. You don't have to, but you could double check it by just saying, okay, if 240 were sold, they would have been the earliest ones, 120 at $80 and 120 at $90. So when you calculate that out, you still come to the 20,400. So you're good. You know that's correct. For LIFO, just looking at it from a different angle, which ones would you sell first? If you were using the LIFO method, you would sell these latest purchases first. So that means your inventory that you're left with would be the earliest purchases. So to get that 40,200, what we had to do was calculate the ending inventory at LIFO being, we sold the last ones. So the first ones are still there. 120 units at 80 are still here. And then the remaining of the 460 is 340 units at $90. So if you multiply those two out, you get 40,200 as the ending inventory. So if you subtract the ending inventory from the available, it's going to bring you to cost of goods sold. And under this method, LIFO method is 25,600 cost of goods sold. And you can double check it by saying, well, if I sold the latest ones, let's see if that works. 200 units at 110 plus 460 total. So I'm sorry, 240 total. I think I said that wrong a moment ago. 240 total. And if 200 of them were in the last purchase, then 40 of them from the $90 lot. That brought us to the ending inventory of 25,600. So that agreed. It just verifies it for us. So that is the FIFO and LIFO for this problem. We're required to calculate the goods available for sale, the number of ending inventory. We did that. Oh yeah, I see. I was quoting two different things. That works. Then calculate for FIFO, LIFO, and weighted average. So the weighted average calculation we had to come up with, we could have done that right up here on our table from this total of goods available divided by 700 units. And that would have given us our per unit cost for weighted average method. So again, goods available didn't change. $94 per is the weighted average cost. And so 94 times the 460, sorry, that we have in our ending inventory brought us to 43,240. 65,800 minus 43,240 leaves us with the cost of goods sold of 22,560. We could verify it by saying $94 times the 240 units sold, and it would be the same number. Okay. All right, so now we got one more exercise in this group. It is exercise 717. We'll scroll down here and see what page it's on. Okay, looks like it's on page 337, 717. And now this one wants us to refer to the information in E77. It's assuming that that same, let's see, did we do E77? Yeah, that's the one we already did. It wants to apply the inventory costing method perpetually at the time of each sale. The company sold 240 units between January 16th and the 23rd. And it wants to calculate the ending inventory and the cost of goods sold using FIFO and LIFO. So this is the same problem we just did based on the periodic method, and they're going to flip it to the perpetual. So I'm going to go back up to the data set for 7.7. Okay. All right, so the sale happened between the 15th and the 24th. So right in here, when the sale happened, when they were at this stage right here. So we had, at that point, we have to figure out what our inventory is. So I'm going to go ahead and reveal this so we can just work through it. Under perpetual FIFO, we would have had the 120 units and the 380 units. And we're pulling these from right here. And that would tell us what our inventory is at the point of the sale. We sold 120 units and another 120 units. In other words, we sold 240 units. They were all sold at this point before the last purchase. So under FIFO, it means we would have sold from this first lot, all of them. Then we would have sold 120 more from the second lot. And that would leave us with inventory value of 23,400 at that point, and then we would buy the last units to bring us to an ending inventory of 45,400, which is 260 units at 90 and 200 at 110. So we still had not sold all of these basically at that point, and then we added these. So the cost of goods sold then would be 120 units at 80 and 120 units at 90 based on this table right here. And so the ending inventory would just be whatever you're left with on your cumulative table. And it actually turned out to be the same. Perpetual FIFO and periodic FIFO turns out to be the same number just because of the nature of FIFO, first in, first out. But LIFO does not. So when we go to the LIFO and calculate it, let's go ahead and reveal that one and talk through it. Let's see, because I'll just try it up here and see if that helps. It's got something. It thinks I'm trying to do something I'm not trying to do. So let's try that again. Okay. For some reason, it won't give me those yet. There we go. Okay, so for this one, it's LIFO. So we're selling from the last group first. but we're selling them right here before we bought the 224. So the last one purchased on that date was not these $110 units. It was these $90 units, right? So we start out with the beginning inventory and we purchased the $90 units. So this is where we stood at the time we're about to make the sale. The perpetual inventory makes you look at where do you stand? What is your cost at the time you're going to make the sale? So here's what we had. We had 2 lots. So we sold 240 that day, and they all came from this last lot of $90. So what was left then is we still had all 120 of the first lot, and we had 140 more of the second lot in our inventory. So then we bought 200 more at 110. So you see the ending inventory with selling that one lot that was from the January 15th purchase. We were left with all, under LIFO, we had still all of the beginning inventory. So that's still with us. Then we had 140 of this second $90 group. Part of that one was there. And then we had purchased these after the sale, so we still had all of them as well. That's what this is tallying up. 140 of that $90 group, plus all of the first beginning inventory and all of the last purchase. So that brought us to this 44,200, and that was the ending inventory. And the cost of goods sold was just this sale that we had already calculated, 21,600. It was 240 units at $90. And that was the cost of goods sold. So it becomes a little more complicated whenever you're doing LIFO with perpetual, but it's not anything that you can't figure out, because you just have to look at what is available at that moment that you're making the sale and apply the LIFO just like you would have, but just do it at the point that you are making the sale rather than waiting until all the year's purchases have been listed. Okay, so that's all for this one, and I'll come back and grab some from another chapter.